Today, we are sort of unpacking the May inflation report that everyone's been waiting for, specifically looking at what the latest CPI numbers might tell us about whether U.S. companies are passing President Trump's tariff costs onto you, the customer. We've gone through quite a few articles, reports, all coming out just before the official data release today, June 11th.
Exactly. And our mission really is to pull out the key insights from all this. President Trump has been pretty clear, hasn't he? Telling companies to, eat these costs, don't pass them on. But the economic reality, is that actually possible? That's the real tension here.
It really is. Everyone's watching to see if these higher import taxes are actually showing up as higher prices when you go to buy things.
So let's start with the forecasts.
Yeah.
These were based on surveys done before the official numbers landed. What were they expecting for May?
Well, the headline number, the overall CPI, was expected to show a 12-month increase of about 2.4%. Right, which is just a little tick upwards from April. And April, the sources reminded us, was actually the lowest inflation we'd seen since, 2021?
Yeah, 2.3% in April.
Yeah.
Lowest since 2021, that's right. Good context. And if we look at core inflation, that's stripping out food and energy, the volatile stuff, the expectation there was for a 2.9% rise over the year. Again, just slightly up from 2.8 in April.
Okay, and month over month, that core number from April to May.
The forecast there was not 0.3%, 0.3, up a bit from 0.2 the month before. But, even with these small increases, we're still talking about price levels pretty close to the Fed's 2% target.
Much better than that scary 9% peak in 2022.
Oh, absolutely. Miles away from that.
So the expected May numbers looked, fairly contained, just a modest rise. But then you have this big elephant in the room. President Trump's tariffs pushing up on prices, and economists seem pretty united on what tariffs fundamentally do.
They do, generally speaking. The basic economic view is a tax on imports adds cost. Simple as that. And while maybe companies try to absorb some of it, maybe for a while, eventually, a lot of it tends to get passed along. And we were seeing plenty of signals from businesses saying, look, we're feeling this pressure. We're probably going to have to raise prices.
What kind of signal? I remember reading about some big companies and surveys, too.
Yeah, one of the really notable ones was Walmart. Last month, they pretty much announced that, yes, consumers would probably start seeing higher costs. They even added something like they'd try to keep prices low, but, and this is the quote, given the reality of small retail margins.
Wow. When Walmart says that, given their size and buying power, you really have to pay attention.
You really do. And the point was made, if a giant like Walmart feels that squeeze, think about smaller businesses. They're definitely in a tougher spot. We saw that echoed in surveys too. The NFIB, the Small Business Group, their May survey found a net 31% of members planned price hikes. That was up from 28% in April.
So small businesses also getting ready to pass costs on. What about manufacturers? Further up the chain.
Similar story there. S&P Global's report, it showed U.S. factories in May had the highest share reporting price increases since way back in November 2022. And the ISM's manufacturing report, another really key indicator, had firms saying these tariffs had, I think the phrase was, wreaked havoc on their planning because of potential higher costs.
Okay, so retail, small business, manufacturing, they're all saying costs are up, prices are likely going up. But the May inflation forecast was only for that small increase we talked about. That feels like a mismatch. What could be pushing back against those pressures?
That's the puzzle, isn't it? And the sources suggest that maybe any relief or any reason the May number might look low, it's probably less about companies just eating the tariff costs. It's likely more a reflection of the broader economy maybe slowing down a bit.
So weaker demand, making it harder for businesses to actually implement those price hikes, even if their own costs are rising.
Precisely. You might have a softening job market. Maybe consumers are feeling a bit less confident, cutting back spending. There was some data cited, like from Bank of America, showing slower growth in spending on things like flights, hotels, gas in May, suggesting maybe less travel. Their overall spending data was even mentioned as being below levels from before President Trump took office.
Interesting. So weaker demand could be one factor. What else might be keeping a lid on things, at least for May?
Well, another really significant piece is that some tariffs have actually been eased recently. Remember that U.S.-China trade deal back in May?
Right, yeah.
That actually rolled back some of the tit-for-tat tariffs.
And wasn't that after the big Liberation Day tariffs were announced in April?
Exactly. And the White House also paused a big chunk of those Liberation Day tariffs just a few weeks before that May trade deal. Plus, they eased some specific duties on autos. Some things from Mexico and Canada got rolled back too.
But there's still that broad 10% tariff on most imports generally. Or is that gone? It's complicated. Yes, generally a 10% tariff applies, though there are exceptions like chips and medicines. But the sources highlighted this layer of legal uncertainty. Recent court rulings have apparently put that broad tariff into what they call legal limbo, so its future is a bit murky.
Okay, so some specific tariffs eased. The big general one is maybe shaky. But certain important tariffs are definitely still in place.
Well, absolutely. Don't get me wrong. Steel, aluminum, autos, certain goods from Canada and Mexico, those tariffs are still very much active.
Right, so it's a mixed bag. Businesses feeling tariff pain and signaling price hikes, but maybe offset by a slowing economy, some tariff relief, and this legal question mark.
It is a mix, and this brings us to something really critical the sources emphasize, the time lag.
The delay.
Yeah, the delay. Economists point out that the full impact of tariffs, it doesn't just instantly appear in the official stats like the CPI report.
So it takes time for it to filter through from the importer to the price you pay. Exactly. There's this example from Pantheon macroeconomics analysts. They looked at the 2018 tariffs on washing machines under President Trump, and they found it took a full, 3 months before you really saw those price increases reflected in the data. But here's the kicker. Once they did show up, the pass-through was apparently rapid and complete.
3 months, that's quite a delay.
It really is. So, if you apply that logic, that historical pattern, to now, well, the bulk of these latest tariffs were announced back in April. So following that 3-month idea, the full weight of these new tariffs might not even start showing up properly in the inflation numbers until, July?
Okay. That helps connect the dots. That could explain why the May report, even with businesses already feeling it, might only show a small increase. The biggest hit from the tariffs just hasn't had time to work its way through the system into the official figures yet.
Precisely. It's like the pieces of the puzzle are arriving at different times. And this whole picture, the tariff uncertainty, the slowing growth, hints, and it also feeds into those concerns about stagflation.
Right. That nasty mix of rising inflation and a stalling economy. Fed Chair Powell mentioned that risk, didn't he? Linked to tariffs.
He did. He specifically warned that tariffs could contribute to that risk. And, that puts the Federal Reserve in a really tricky position.
Yeah, a bind. What do they do?
Exactly. Do they raise interest rates to fight inflation? But that risks slowing the economy down even more, maybe causing a downturn. Or do they cut rates to try and boost growth? But that might just let inflation run hotter.
It's like trying to land a plane in fog. So what's the Fed actually doing?
Well, for now, it seems to be very much wait and see. They kept rates steady in May. That was the second meeting in a row they held pat. And looking ahead to their next meeting, June 18th, the market is overwhelmingly betting they'll hold steady again, like 99.9% certain, according to the CME FedWatch tool.
Wow, okay. So no one expects the May data to force their hand just yet. But longer term, some forecasts do see inflation picking up more significantly.
That's right. The OECD, for instance, they put out a forecast suggesting U.S. inflation could hit 4% by the end of 2025. That's quite a bit higher than the 2-point-something% we're talking about for May.
Okay, so let's bring this all back home. Why does this deep dive into, forecasts, tariffs, business responses, why does it matter directly to you listening right now?
Because ultimately, whether companies absorb these tariff costs, like the president wants, or whether they pass them on, that directly hits the prices you pay at the grocery store, online, for bigger purchases. And even if inflation isn't at that 9% peak anymore, any kind of steady price increase, it feels like, one analyst called it, a persistent itch that doesn't go away, just grinds you down.
That's a good way to put it, that persistent itch. And all this back and forth, the uncertainty about tariffs, trade deals, legal challenges, it really does, as the sources said, scramble the spending plans. Not just for businesses trying to budget, but for you trying to figure out your own household budget. It shakes confidence.
Absolutely. It just shows how connected global trade policy, corporate decisions, and your own wallet really are.
Definitely. So, wrapping this up, the key tension we've explored is this. The White House push for companies to absorb costs versus all the signs from businesses saying price hikes are coming. The May inflation report might only show a slight increase based on those forecasts, but our look at the sources suggests that's likely due to a mix of things, maybe a slowing economy, some tariff relief, but crucially, that timing lag.
Right. The full tariff impact probably isn't even in the May numbers yet. And that lag really leaves us with the big question, doesn't it? If the real effects of these recent tariffs might only start hitting the data around July, and you've got Chair Powell worried about stagflation, what could inflation look like in, say, July, August, September? And how might that change the equation for the Fed later this year? And maybe more importantly, how does that uncertainty affect your own financial planning going forward? That's really the thing to watch.